This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel, who is joining in, and Sonia should be with us as well in just a bit. Nigel, good morning.
Well, morning, Prashant. Friday, right? That's what we wait for all week. And, Prashant, later this evening, I'm going to be tracking your Twitter ID because I think you'll be updating us on what the Fed chair says.
Well,
no updates from me.
Nigel moves on to other stuff, right? I mean, Friday evening onwards, he moves on to other stuff.
Friday is just chill.
All right. Well, let's just quickly run you through what you need to know and, what is the setup this morning. It's actually a flip-flop, basically, not very much, really. So, yesterday, the up move got rejected. The Nifty up move got rejected a little above the 20-day moving average. That's the initial sort of first glance. And I think this may create a little bit of nervousness, a little bit of anxiety that the market got to an important level, crossed above it, and then there was a very sharp sell-off from that point on. How is the U.S.? I'll get to levels, etc., and what to do in a bit, or what not to do. U.S. markets also had this is the flip-flop I'm talking about. So U.S. looked, this same morning yesterday, we were talking about U.S., which was higher and sharply down. NASDAQ down about almost 2% or so. The 2-year is back above. The U.S. Treasury 2-year yield is above 5%. The dollar index saw a very large move. I mean, 104 plus in a single day went up about 0.65%. So data is basically the reason for this. We were talking about manufacturing PMI numbers yesterday morning and how they were soft and how the market responded in a dovish way. Well, you had other data. You had the jobless claims number, which was weaker, which was lower than expected, which indicates a tighter labor market. We had consumer durables, but ex-transportation core consumer durables data, which again was strong. It reinforced hawkish risks. There was also a regional Fed survey which showed that the economy generally seems to be resilient, and that's the weak PMI, and then suddenly strong data 1 day later, and the market kind of was in a bit of a tizzy. But I think beyond all of this, the more important thing is what we will hear from Jerome Powell later tonight. The speech is tonight, and the market will see whether he really wants to indicate a shift in policy tone, etc. 1 year ago, around the same time, at the same symposium, he basically said how we don't want to repeat the mistake of 1970s when actually the Fed was increasing rates and then they paused prematurely. They only, of course, found out later, and then they had to do a lot more. That was the basic message 1 year ago. Will he do something similar now? Because we seem to be in a place where the Fed's done a lot. Many are expecting it to pause, but inflation and data, etc., is still strong. So will we see a message? I mean, if there has to be a change in what they plan to communicate to the market, this would be an appropriate venue to do so. Okay, let's just come back to but that's later tonight, right? We'll only find out Monday morning. In the light of all of it, I think the advice on the indices, the Nifty, Bank Nifty remains the same, which I've said for the last couple of days: stay away. It's choppy. The market sells off intraday. It sells off from different levels, etc. One can argue and say that perhaps the base has been moving higher, the bottom has been made, but let a better, clearer picture emerge in terms of what the market wants to do near term. The 20-day moving average for the Nifty is 19,509. That's the first resistance level to cross. That's point number one. The next resistance is the 19,616 level, which is the 50% retracement of the fall from the all-time high of 19,992 to 19,253 last week. The 50% is 19,616. And as I said, hopefully we've kind of made peace with the low that we made last week, which is 19,253. If that starts to emerge into focus again, we'll have to watch. But hopefully we'll be able to defend that. And I think because today is Friday, it's a weekly close, it'll be important to have a positive weekly close as well. Adds to confidence, right? So you need a close above 19,310 point something for us to have a positive weekly close. So keep that in mind. We're above it, but I mean, let's see what the close is. The Nifty Bank sort of crossed the 20-day moving average, but it failed to close above it. Similar kind of picture. But the Bank Nifty, after yesterday's move and day before yesterday's move, is the stronger of the two indices because of the last two sessions, at least right now. The 20-day moving average for the Bank Nifty stands at 44,646. And the next level for the Nifty Bank to take out is 44,895. But my basic message, at least on the indices, remains the same. It's easier said than done. So let a better, clearer picture kind of emerge, and that will give you better sort of entry points and more confidence to stay on with your positions, etc. Implied open in any case is indicating a full 100-point impact on the downside. Sonia.
Oh, absolutely. And you begin by saying that it's Friday and you're going to be tracking the Jackson Hole Summit.
Well, Nigel says that.
I'm not going to be for sure. Not on a Friday night.
One of us have to do it.
It's okay. We can look at it on Monday morning, right? But it's going to be an interesting day because it's going to be a day that starts in the red. Most Asian markets are now tracking huge losses this morning. So we'll just pull up the Asian market plate for you. The implied Nifty opening is also under pressure, down almost about 100 odd points. Look at that, Hong Kong, Taiwan, all down about 150 to 200 odd points. There was a sharp slide even in the US market, so the Dow was down about almost 400 points. But let's see if at the Jackson Hole Summit there is any indication of what the monetary policy could be from the Fed. All eyes will be on that. Generally, it's not a very big market moving event. It's kind of like a 1 hour play, even in the US market. So it's just a signal for our own markets, nothing alarming. In the meantime, the Nifty continues to be in a very, very tight trading range. Every time it gets to the upper end of the trading range at 19,500, it pulls back. When it gets to the lower end of the range of 19,200, there's buying. So we seem to be stuck in that very, very tight range. Having said that, large block deals yesterday, so the flows looked good. Of course, the DI number includes some of the large block deals, but FIs as well continue to buy in the market. 1,500 crores is what we saw. A couple of stocks to watch out for. The biggest loser this week is Reliance. It's down almost 3% this week. It gets into its AGM on Monday, so that will be the next trigger to watch. Any indications of IPO timelines are keenly awaited, and then of course you had that deal on Reliance Retail as well. But the stock has been under pressure, so just keep that in mind. And banks have made a bit of a comeback this week. Axis Bank, some of the NBFCs like Bajaj Finance up about 3-4%. So my eyes are going to be on those stocks as well. Defense too could be in focus as the Defense Acquisition Council has approved proposals worth almost 7,800 crores. A couple of them like BEL are in focus, Hindustan Aeronautics, etc. And that has been one pocket that has done very well. So we'll keep watching that too. But at opening, I guess the market is not going to do that well given the kind of global setup that we have.
Well, in the last 10 days or so, Sonia, whenever you bought the dip closer to around that 19,250 odd mark, you've made money. So today is going to be a bit of a test out there because you have the big event later this evening when the Fed chair speaks. You have the dollar index that's very, very strong overnight, and the global cues as well that are coming in there, they are fairly feeble. So it's going to be a test for the scalpers. We have been saying this is a scalpers market. That's you buy at lower levels and you square up the position once you get a bit of a bounce, if you do get that bounce. So that's going to be the test. The Nifty PCR, that's a technical indicator. That's moved to the lower end of the band. And the third part is maybe some part of this is factored in because yesterday in the second half of trade, we saw a sharp sell-off both on the Nifty as well as the Nifty Bank, and that was expiry related. So we'll have to keep an eye out on how much of that is already in the price as well. Now, just to recap, yesterday, the Nifty went ahead. We broke the 20 DMA, but we couldn't sustain over the 19,550 odd mark. The Nifty Bank, it's facing resistance at higher levels, 44,700, 44,800 odd. We're seeing some bit of resistance out there. We breached that, by the way, yesterday by close to 200 points. But then, in fact, we came back down. The FI positioning, well, it continues to remain net short. Yesterday, there was a marginal move of close to around 5,000 contracts. They unwound some longs and they added some short positionings. The net short position, though, remains at close to around 56% odd. The PCR, the point that I was making, it was at around 1.1 odd. That's cooled to around 0.78. Now, technically, we have seen that when that PCR breaches the 0.7 odd mark, that's from where you get a bit of a bounce. If we're looking at a technical indicator, that could be one of them. Now, two strikes were very, very active in yesterday's trading session. 19,500 call on the upside, 19,400 put on the downside. Now, the 19,400 put, that's quite interesting because the premium's around 100 rupees odd. Given that we're likely to start off on the back foot, I'll be watching that whether or not there is some unwinding of those positions because there was some writing being seen out there. And going by the GIFT Nifty opening, that's likely to be breached on an opening basis. The levels then come up for you on the screen. The 20 DMA, that's the line in the sand. The bulls, well, they would like to get past that. The bears are coming in to defend out there. But the recent low, 19,250, I think that would be a crucial zone that the bulls would like to defend. Moving to the Nifty Bank, Well, the 20 DMA, again, that's a bit of a problem point out there. But on the downside, that 43,900, 44,000 odd, crucial support zone out there. So the gift nifty suggesting we pull back 100 points odd. It's going to be a test for the bulls today. Risk reward normally has favored buying in that vicinity of around 19,250 to 19,300. But if in case it works and you get a bounce, I think you should square off your position and not carry it into the weekend.
Okay, well, yes, it's the weekend as well, so you got to take that into consideration. But all eyes on the market opening today, expected to be a soft one. We have plenty of market opinion coming in for you, so let's kickstart very quickly. This Friday morning on the equities front, we have Ray Dalio of Bridgewater Associates, who says that India's successful lunar mission landing its Chandrayaan-3 spacecraft on the moon is another one of the many straws in the wind showing its ascendance. He says, as previously shown in his health index for countries, which is used to derive his projections for countries, the next 10-year growth rates, India scores on top with a projected growth rate over the next 10 years of around 7%. He says India has the right mix of ingredients that shows that it has great potential and the right leadership to catalyze it.
Okay, well, let's get you some money market views. We have Lakshmanan V of Federal Bank, who says that the rupee took a breather against the US dollar, touching a 3-week high as the US 10-year yield cooled from a 15-year high of 4.36%. He says the market will take further cues from Fed Chair Jerome Powell's speech at Jackson Hole later today. He expects the rupee to be in a range of between 82.36 to 83.15 to a dollar for the next few trading sessions.
All right, and on the bonds, Lakshmanan says the 10-year benchmark bond yield cooled off to 7.2% from its 4-month high of 7.25%. Tracking U.S. Treasuries, he says concerns around inflation still persist on the back of uneven monsoon and El Nino conditions. He expects the 10-year bond yield to trade in a range of 7.15 to 7.25% in the next few trading sessions.
Okay, well, Mark Matthews of Bank Julius Baer is now joining in to run us through what he makes of the setup. Mark, good to have you with us here. Thank you very much. Will we have is it possible we get a bit of a earthquake later today with, Fed Chair Powell's speech, or you think it'll be, will you use that as an opportunity to indicate that, well, perhaps there is more coming and we are not at the so-called neutral rate?
No, I don't think he'll talk about the natural or neutral rate, or if he does, he will simply reiterate that they are low, sort of around 2.5%, which is what the Fed has been saying for some time in its forecasts. And as Sonia pointed out, it's not typically the venue for really groundbreaking changes in policy. Last year was a bit of an anomaly in the sense that he ended up being a lot more hawkish in Jackson Hole than he was going into it. But this year I see no reason for him to do so. I don't think the backdrop is one that necessitates a dramatic escalation in the hawkishness. I mean, Treasury yields are, as you know, well above 4%. So the market has already kind of priced in the Fed keeping rates high for some point in time.
So since this is not such a big event and, the market is perhaps going to move on, how are you feeling about the market in general, Mark? Because there is this expectation that perhaps the US could head into a recession, consumption is slowing down a bit, inflation concerns persist globally, right? Not just in the US. What do you do at a time like this with risky assets like equities?
There are a few indicators that would suggest an impending economic downturn. For example, commercial real estate loans and some of the credit card data. But apart from those, the data is suggesting actually a very strong economy. And the one I would point to highlight most of all would be the Atlanta Fed's GDP Now forecast for the third quarter, which is inferring, I think the latest is 5.7% quarter-on-quarter growth based on 10 high-frequency inputs. And so there are a few outliers, as I said, that suggest a recession, but I think they're too much of a minority, if you will. I don't think there will be one. I think the economy is strong. And how that translates into the market is that it means rates can stay high, and we are on about 20 times forward price earnings. So I don't see the market going higher in the next month or two. I think probably it should drift down, if for no other reason than the fact that June and July were up 10%, which is way above what the summer months usually are. Summer months are usually about a 3% rise. And so I think it's totally normal that we'd give back some in August. And September 1 is one of the rare months of the year, which on average, if you look back historically, is a down month, on average by 0.7% for the S&P. But I don't see a collapse because I do think that going forward, the earnings are going to improve, and we'll probably have in excess of 10% EPS growth for the S&P in 2024. So if that's the case, the market can grow into its earnings.
All right. Hi, Mark. Good morning. How do you approach the Indian markets? Mark, in the last 1 month or so, you've seen the dollar index move up by close to 3.5%, 4%. Brent crude prices as well are up by close to around 5%. But the Indian markets are unruffled as of now. We're not seeing any big pullback. Your take on the Indian markets, because these are clearly risk for our Indian equities.
Yeah. We're constructive on the dollar, and that is a headwind for emerging markets, including India. No denying it. But I do think that the change in the macro landscape in India, both fiscally and the current account, they speak in favor of the rupee not losing a lot of value. So I'm not that worried about the rupee. And what I would say, your other question, it was dollar. What was the other one, Nigel? Sorry, you mentioned something else.
Crude oil prices
anyway,
as well have spiked.
Oh, yeah. So we're not constructive on oil. We're looking for $75 a barrel 12 months from now. There's ample inventory. In fact, the inventories are going to they're going to start overflowing in Europe pretty soon. They can't handle anymore. Their inventories are so full. And likewise in the U.S. and China. So the reason we had a spike in oil during the summer was simply that the futures market was very, very short oil. And then you had the Saudis extending their cut into September, but they're not going to do all the hard work and let the other oil producers just ride on their coattails. So don't think oil is an issue. And I like the Indian market. It's got I think it just has everything going for it now, from earnings growth to all the benefits of the structural reforms starting to kick into the economy. We like it very much.
Okay, so you like the Indian markets very much. Got that. I think that's been your base case for a while now, right? Through the course of 2023. Within the Indian markets, do you prefer banks? Do you like IT stocks? And what should the allocation be now towards sectors for the rest of the year?
We've always been fond of banks, and we also like the materials on the back of the increased infrastructure spend and consumption where it is attractively priced. We would be buyers of, but selectively, because a lot of those stocks are overhyped. But the idea in India is that the middle class will grow and with it consumption. And I think a very important ingredient there is the increased participation of the middle class in the stock market through SIPs will, over time, make people wealthier. And that is a big reason why the consumer is 2/3 of the U.S. economy, is because equity ownership is high in the United States. So the middle class benefits from the rise in share prices. They don't in many other parts of the world. And that makes them feel wealthier and they spend more. So those three sectors would be our preference.
All right. Thanks a lot, Mark, for stopping by. Have a great weekend. And hopefully we'll hear from you very soon again. That's the word coming in on the markets. They like the Indian markets, but they're also constructive on the US dollar, which means it's a negative for emerging markets like India. So that's the viewpoint. Let's slip into a quick break, but it is the last trading day of the week. So our entire research team will be up in just minutes from now to tell you about the top 10 stocks to watch out for as we begin the day. Welcome back to Bazaar Morning Call. We're beginning the morning with some cues that are not that great if you're a bull, but we'll take it as it comes. Our research team is joining in now to give us a list of top 10 stocks. First up, there's that Paytm block deal that Nimesh is going to tell us about. Nimesh, good morning.
Morning, Sonia. So, the block saga continues. Another large block. This time, Antfin is selling its 3.6% stake in Paytm. The book was launched last evening. The floor price indicate is 880, which is not a large discount to yesterday's closing price. So my sense is the deal may happen in the block window today morning. So if it happens in the block window, I guess it suggests that the demand would be strong. So I'll go with the green, largely because the demand is strong, not a large discount, and looks like it's a clean out trade. As far as Ant Finance is concerned, they're selling their 3.6% stake in Paytm today via block deal.
Okay, all right, Nimesh, thanks a lot for that. But Vivek joins us to tell us about more large trades that he's looking out for. Vivek?
Well, good morning. The trend continues. A lot of names today. First on our list, Amber Enterprises. Now, P, that is Ascent Investment, is looking to sell 4% stake in the company out of the total 9.76% stake that they held at the end of the June quarter. Total offer size close to 380 crore. Once again, in this particular block deal, there's not much discount to the buyers. So the discount is actually just around 0.5%. The base price is at 2,800 rupees per share. The other one that we're looking at is Minda. Again, one particular block deal expected here. Promoters are looking to sell up to 2% stake. 1.25% of the total equity is the base size. The other 0.75 is the green shoe option. Base size of the total block is close to 431 crore and the green shoe option is around 258 crore. The floor price is at 602. Once again, not much of a discount over here as well. And lastly, Tattva Chintan Pharma looking to raise funds via the QIP route. Company is looking to garner close to 200 crore and the floor price for this particular fundraise is at close to 1,704.7 rupees a share.
Okay, thanks a lot for that. So those are several block deals that have taken place, but Ekta is also joining in. She has Aurobindo Pharma on her radar this morning. Ekta, how's it going? What's the buzz on Auro Pharma today?
Thanks for that. Well, it is a Times of India report which has indicated that the promoters have restarted the process of selling majority stake in the injectables business, which is Eugia Pharma. Aurobindo has hired an investment bank, Moelis, to manage the process. Now, the key difference is that the valuations have been brought down to around $2 to $2.5 billion versus earlier estimates of $3 billion. This is the second time the promoters are attempting to sell Eugia Pharma. The company, remember, had put negotiations with Blackstone as well as Bearings on hold due to multiple issues, and now they've restarted the process. We have not verified the report independently, but nonetheless, we could probably see some upside to the stock considering that it had ran up on expectations earlier on account of this.
All right, Ekta, thanks very much for that. Well, let's talk about insurance now. GIC RE perhaps will be in focus in not a good way. Yash is here with details. Yash, morning.
Well, that's correct, Prashant. So, of course, GIC are in focus and in focus because the stock is expected to remain under pressure, and that's largely because of the amendments in the reinsurance sector which have been approved by the insurance regulator. There are two important amendments which have come here. One is that to start a new reinsurance company in the Indian landscape, the insurance regulator now has reduced the initial capital to about 50 crore from 100 crore. This simply means there is expectation of greater competition coming from foreign players to the Indian sole reinsurance company, that is GIC RE. The second one is that the new amendments also take away the advantage of order of preference which existed with GIC RE. GIC RE so far in the current context could match the lowest price on any given insurance contract for reinsurance. That has been taken away. Foreign reinsurance branches have been brought on par with GIC RE when it gets to getting a particular contract awarded when they quote the lowest price for that contract.
Okay, thanks a lot for that. Well, Surbhi is with us. There are some more stocks that are in the news, so she's going to give us a lowdown on that. Surbhi, over to you.
Thanks so much for that. So first on my radar is BEL. So the Defence Acquisition Council has approved procurement of electronic warfare suits for the Mi-17 helicopters, and this is going to be from BEL. Next is Keynes Technology. The company has entered into an MOU with the government of Karnataka for 3750 crores. Now this is to set up a semiconductor assembly and testing facility and also a printed circuit board manufacturing plant. Supreme Industries, the company has signed an MOU with Parvati Agroplast. This is to acquire their PVC pipes business for 235 crores. The consideration also includes an adjoining land parcel of 171 crores. And lastly, Astra Microwave will also be on our radar. The company bags an order worth 158 crores from the DRDO and ISRO.
Okay, thanks a lot for that, Surbhi. Well, here's a quick recap of our top stocks. Stocks with positive news flow. There's Paytm, Amber Enterprises, Uno Minda, Aurobindo Pharma, BEL, Keynes Technologies, Supreme Industries and Astra Microwave Products. While stocks with negative news flow, there's GIC and Tattva Chintan Pharma. But let's also find out what's happening in the world of commodities. Brent crude prices are still hovering around that $84 a barrel mark. There's been a little bit of pressure across commodities, so let's find out more. Manisha Gupta joins in to give us the latest over there. Manisha, morning.
Morning, Sonia. Thank you for that. Well, yes, the PMI data from the US and Eurozone shows weak activity, and then we are dealing with the Japan reporting third month of decline in factory activity. So we are looking at the crude oil prices headed for a second weekly decline. Both the crude varieties are down between 2 to 3% for this week. Markets also are dealing with the higher inventory buildup in US gas and distillate. But all these markets clearly are awaiting the Powell's speech. And ahead of that, we have the dollar index above 104, which is a 2.5-month high. And that is putting pressure not just on the crude oil prices, but today we've started the day with some weakness in precious metals. And the industrial metals, which had gained for last 3 days, also have come under some pressure today.
Okay, well, Manisha, thank you very much for that. We'll take a quick commercial break here. We're going to come back. Siddharth Khemka of Motilal Oswal Financial Services is going to be joining in for a fundamental check on things. We will connect later also with Prashant Tripathi of Max Life Insurance to talk about the quarter gone by and business outlook going forward. Stay tuned.
Welcome back. If you're just joining in, the gift nifty is suggesting a start deep in the red, down almost about 100 odd points, in fact more than that. But let's see, this market has been very range bound. Plenty of individual stocks in focus. So time now for our first corporate interaction. Max Financial is on our radar. Prashant Tripathi, the MD and CEO of the company, joins us to discuss their business momentum and what the growth is looking like. Mr. Tripathi, good morning and thanks for joining in. First I just want to start by asking you about how the quarter that we are in, how is it shaping up? Do you expect Q2 to be better than Q1? And, what is the expectation in terms of business momentum? What is the kind of APE growth that you're expecting now?
So I anticipate quarter two to be definitely better than quarter one. For the month of July, which are published numbers, we were 19%. I'm hoping that August, which is going to just get over, as well as September, will be significantly more stronger. So as a result, I think we'll finish quarter two very strong. H2 definitely should be better than H1, with an exception to March, because that we are dealing with large base effect. But one is expecting to end the year, March included, with a double-digit kind of growth number. That's our plan for this year. And we will work towards, with an exception to March as a month, we'll work towards a 20% kind of growth number for the rest of the months.
All right, sir. But if you could tell us, what's the outlook on VNB growth and margin for the current fiscal, that's FY24?
I think it's a bit of, futuristic thing, but do anticipate better than, where we are in quarter one. We finished last year, our VNB margin was right about 31%. And the guidance that we've given to the investors is that we would like to be between 27 to 28, because we're making huge investments in growth. As we speak, we are opening 100 new agency offices. We are expanding. We have recruited a lot of people. We are hiring agents. There's a lot of investment that we're making. And when you make fixed cost investment, it eats into margin a little bit. So, for the coming 2 to 3 years, I think we will prioritize growth over margin, not to say that margin is going to suffer drastically, but we are in good space already. So this year, we intend to finish margin in the range of 27, 28, but over the next 2 years, come back to close to 30%.
Right. Mr. Tripathi, there were certain block deals in Max Financial yesterday. Promoters have been selling stake. Do you see more selling from promoters here? Or you think what we've seen is the end of it?
So, of course, as you know, the objective is to deleverage. And, the deal or this particular deal is in that direction, to deleverage and reduce the level of pledge in the company, which is definitely positive. I think as a result of this, the promoter holding will come down. But I think my sense is that's about it. So, with whatever share that got transacted, the balance the promoter will continue to hold. Again, I'm not very close to this deal. This is really in the realm of investment from the promoter, and they'll be best placed to answer. But I think all good for Max Life Insurance. I think there was an overhang of pledge levels, etc., and our promoters have very meticulously worked towards enabling the business. So you see the two events which were always a question mark. For example, the Axis transaction, which is coming to a closure, and the leverage situation, and our promoters have worked in resolving both of them.
Got that. That's good to hear. Mr. Tripathi, just to come to that Axis Max Life transaction, you've announced Axis Bank Max Life deal at 113 rupees per share, when the listed parent and practically all businesses in life insurance trading at about 850 rupees per share. So there's a vast difference. And some are talking about this. How do you justify this deep valuation discount, between 113 rupees per share and 850?
Yeah, I mean, the valuation that you see in share price is definitely a parameter which continues to go up or down. Maybe a couple of months ago or 3 months ago, that number was 600. So, that keeps changing. The way valuation is done is done through the cash flow analysis and with assumption on discount rates, etc., and not done by professional valuers, category 1 merchant bankers. So we actually gave our cash flow analysis and they came up with this valuation. So really, it's not the valuation that we determine. It's an externally valued number that we have to go with.
Okay. Are you confident that the IRDAI will approve this valuation and the transaction this time around?
I'm very optimistic and positive, because we are just adhering to the recommendation or guidelines which was given, which was to do the DCF-based valuation methodology. This is what we have pursued through category 1 merchant bankers. We have done that. And honestly, this valuation is significantly higher, from the tax book value, that approach that we had used last night.
All right, so what's the timeline for this Axis Bank Max Life transaction?
So it will be a parallel effort that will begin. There is a shareholder approval that we will procure, after which I'm hoping that in a few weeks' time we'll be applying to all the regulators. And it is anticipated that by the year end, which is December, before December end, we'll be able to consume it.
Well, Axis Bank also intends to buy 0.98% stake in Max Life at a later stage. Why not acquire it now? And why acquire it from Max Financial and not through a fresh issue in Max Life?
Basically, Axis Bank is supposed to go up to 20%, right? They have approval from RBI to do the 1,612 crores. So when we did the math of valuation and working backwards, it turned out to be about 6%. They can go up to about 19% through this transaction. The balance 1%, as and when they have capital available, we've said it will be done with Max Financial Services, not with the promoter, Max Financial Services, like the 13% happened. Why not to our company? Because, they don't have the capital right now or the approvals from RBI to do that. Maybe, it could be sought later. And number two is, this capital will be good enough for Max Life Insurance to serve its needs for capital for next 2 years. We actually don't require that capital. So, putting additional capital, it doesn't help the company. Actually, it is sitting idle.
Okay, Axis Bank will be infusing upwards of 1,600 crores in Max Life. Where does that take your solvency, and where do you plan to use these funds?
Yes. So basically, this capital will take our solvency at the end of Q1, which was 188%, to about 226, 227. It's an absolute 39% increase. Max Life Insurance is a growing company, and we have special bets in specific areas like protection, I mentioned to you, like annuities. As you know, they consume more capital by the very nature. We are opening new offices, I mentioned to you. We have huge plans to expand our proprietary channels, which are generally fixed cost-oriented kind of models. So we have acquired many new relationships of late, and we are working with them. So the objective is growth, and when you grow in life insurance industry, you require capital. So that's where the capital is going to grow. To give you a short answer, it is all going to go towards growth, and driving product mix, which is higher profitability.
Mr. Tripathi, Axis Bank's fund infusion could support growth for about 2 to 3 years. What kind of fundraising would you require post that? And would it at that point be done through debt or equity?
So basically, if you look at our structure today, we have about 2,000 crore of equity, and we've raised 500 crores of debt. By design, we could go up to 1,000 crore of debt. As you know, now regulator allows going up to 50%. So we have 500 crore of headroom from the current equity. This 1,600 crore will give us 800 crore more of raising debt possibility. So in a way, we have 1,300 more crore of debt possibility. So with these two put together, I think, we will have enough capital for next 3-4 years. I think for next 5 years, sitting today, maybe we'll require 4,000 crores. So if there is any deficit, we'll just wait out to see what is the impact of, for example, risk-based solvency, etc., whether we release more capital gets released or not. So the objective was to have enough fuel for next couple of years and then go along and look at the capital needs. But subordinated debt will be the next option.
Is there a plan to merge Max Life with Max Financial and get that life insurance business listed?
So basically, we will have to wait for a few quarters for this 20% to happen. Before that, we are not going to start. Any attempt to look at these possibilities is a few quarters away. It will be our desire actually to create a structure which is a listed structure and one combined structure. We are aware that there may be different form of structuring options that may be required, merger, demerger, etc. So we'll start to review that once this 20% happens.
All right, Mr. Tripathi, final couple of questions before we let you go. Does Max Life also get to tap into Citibank's distribution?
For last couple of months, we started to work on that counter. Only last couple of months.
Could you quantify any kind of synergies?
It is just going to mature, so it will be very premature for me to state. We started the insurance sales on that counter.
Okay, all right, Mr. Tripathi, thanks so much for stopping by and filling us in with all of those details. Look forward to having a chat with you in the coming months as well. Well, time to do a quick check on a couple of stocks as well. Siddharth Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Siddharth. Good morning. Thanks so much for joining in. Well, we're going to be having a couple of large trades that will take place today. Paytm, now, that's one of the bigger stocks in there. What's your view on that one? Promoter, I mean, not categorized as promoter. The P is selling some kind of stake. There'll be some flows that will come in as well. But at around 900 rupees, what's your take?
Yeah, very good morning, Nigel. Thanks for having me on your show. So I think we have seen a lot of block deals happening in the market in the past couple of days. That is a phenomenon. I think lot of these promoters have been using the buoyancy in the market to use an opportunity and offload their stake wherever the stake or maybe an overhang was due because of the stake was anyways would have come, as we saw yesterday also in the Coforge deal. So overall, if you look at Paytm, I think our view on Paytm is very constructive, very positive, and this transaction only goes on to remove the overhang that the Chinese earlier promoter, now not classified as promoters, but they have reducing their stake. Earlier, we saw they transferring about 10% stake to Vijay Shankar's family, and now they have about 13% stake, of which about 3.5% stake they would be reducing. So overall, this is a positive step for Paytm towards becoming a full-fledged financial services firm in India, where the RBI is definitely looking at the promoter holdings and the shareholdings, where a Chinese shareholding definitely created a roadblock in the growth prospects. Core business, we have seen how the numbers have been stacking up. Past couple of quarters, the company has reported strong improvement in all the 3-4 segments that we are seeing, be it the GMVs, be it the disbursements or the subscription of devices. All of them have seen pretty strong growth, and we are expecting the company to report an EBITDA of 7.7 billion by FY25, which should kind of be a big positive for Paytm. We have a buy rating with 1,000 rupees of target price, and I think this is this step will only go on to increase the overall, remove the overhang of the Chinese holding in Paytm, and will go on to give more premium valuation to Paytm.
Okay, got that. Siddharth, hi, morning. I wanted your thoughts on BEL. A lot of the defense plays actually have been in focus, right? But this morning, the Defense Council has approved a procurement of some warfare suites for helicopters from BEL. So, there's, extra work for them, of course. But this entire space has been rallying quite a bit. What would your top picks be here?
So, Sonia, I think the defense has seen a lot of momentum in the last couple of quarters, I should say, especially because of the large order books that these players have been getting. A big opportunity for them has also opened up in terms of the exports order book that they have started getting up. So I think defense is kind of a multi-year story from now. We have seen a lot of run-up in some of these stocks. Unfortunately, we don't have coverage on these names, so I don't have the valuation readily with me. But I would say that something like an HAL, BEL, these would be the preferred players within the defense space, given their the capabilities that they have, given their balance sheet size that they have, and the order book on hand. So I would say that the defense orders from the domestic market, so the Indian government giving them orders, plus the export capabilities that they are building up together provides a good growth opportunity for the Indian defense players.
All right, thanks a lot for that. We'll just stay on. We need to take a short commercial break. On the other side of the break, Anuj will be with us to give us a quick trade setup. Post that, we'll tell you about the top stock picks for the day from our technical and F&O experts. Lots coming up in just a bit. Stay tuned.
Okay, welcome back. There's 15 minutes to go for the pre-open session. It's going to be a down one. Anuj is here to tell us what he's making of all of it. Anuj, morning.
Morning, Prashant. I think the hints were there yesterday afternoon, the way the market collapsed after that failed breakout. And I'll start with a chart, which is an ominous chart. Let's look at this data that I tracked. This is the Nifty options put-call ratio and where are the positions placed. Now, what you see in the red is the calls open interest. Look at this 19,500 call and this almost Burj Khalifa building that you have there. 1.18 crore open interest. Nothing even close to that after that. And the strongest support after that is 19,400 put, which is almost half of the open interest that you have at the 19,500 call. So it tells you the kind of session that we had yesterday, the kind of reversal that we had. In fact, the close yesterday was very disappointing. And both Nifty and Bank Nifty, basically what they did was rejected the first test of the 20-day moving average, which normally happens, but the rejection was quite violent actually. The Bank Nifty, of course, once again turning into sell on rally kind of mode, because the failed breakouts normally lead to the market testing the previous support. In this case, those supports are 19,253 and 44,600. What are those levels? Simply the series low. Let's see. Also, the market lacks leadership and triggers right now. And the broader market is showing signs of irrationality. The biggest example of that was Coforge yesterday. After the block deal in which promoters cleaned out, the stock rallied 10%. And it's not as if it's got any kind of valuation comfort. It's the most expensive mid-cap IT stock. Let's see. I was talking to some fund managers. They're struggling to find good ideas at good price right now. But talking about today's trade on the Nifty, let's revisit that 19,500 call. 54 rupee premium there and 1.18 crore open interest. So obviously that's now your big resistance mark. Price action was very bearish. So let's talk about the support as well for the Nifty, because we'll be starting with a gap down. The first support is 19,295 and it looks like we'll start there. And the bigger support is 19,253, which is the series low. Below that, I think there's a problem for the market. The Bank Nifty, which is the trouble part for the market, has been all through this series. Rejection of 20-day moving average was very fierce, and here you have the first support at 44,205, which was the breakout level, and the bigger support is 885 rather, which is the 100-day moving average. Resistance comes in first at 44,650, which is the falling 20-day moving average, and the bigger resistance is 44,949, which is yesterday's high, which actually is now some distance away. I don't think that will matter anymore. The level that you have to focus on is 44,650 on the upside and 44,200 on the downside.
All right, thanks a lot, Anuj, for that. Have a good day. That's how the Lal Street is set up today. But Siddharth Khemka is still with us, so let's get a couple of more stocks going. Siddharth, I wanted your thoughts on Bajaj Finance. Nomura has initiated a buy on the stock, saying that all the concerns on Jio Financial Services are now overdone, and they like the Bajaj Finance story quite a bit, especially after the dip. Would you concur with that view and your thoughts?
Yeah, Sonia, so I definitely concur with that view. We believe that there would be competition in the market, maybe from Jio Financial. We saw that from a lot of host of other financial services companies getting into that space, especially the retail credit consumption, the consumption credit space, which has been the strength of Bajaj Finance. However, we have seen that Bajaj Finance continues to maintain the leadership within that space, and with its technological edge that it has been maintaining a very strong growth, especially if you look at in the consumer credit growth, a space which sees ups and downs. So I think we definitely have a very positive view on Bajaj Finance. We have a buy rating and a target price was 8,800. Jio Financial, if you look at bulk of the right now, the valuation comes from its treasury shares. The other businesses they are looking to get into, including credit, including insurance, AMCs, are just in the national stage and will take 2-3 years to unfold. What Jio will do essentially is expand the overall market size, which would help all the players, including Bajaj Finance, where Bajaj is expected to maintain the market leadership and hence a preferred pick within the NBFC space.
All right, Siddharth, what about from the banking space? AU Small Finance Bank is something that you like?
Yeah, Nigel. So we recently upgraded AU Small Finance Bank to buy. The bank was also part of our recent conference that we held and in its CEO track, the company was very confident about the growth that it can deliver in the years to come, and it's aimed or the objective to transform from a small finance bank to a full-fledged commercial bank. If you look at the past few years, they have delivered of the 6 years that they have been a small finance bank, they have delivered a strong CAGR of an impressive 54% growth in deposits, 34% in the loan book, the scale up of new products, geographical reach. All these makes us pretty positive. We expect the bank to have a 28% loan book CAGR over the next few years, which would be an industry-leading loan book growth. And there have been some concerns in the past with regards to some of the key employees leaving. There has been some concerns with regards to the financials, but I think those are morely overdone. We have seen how the company has survived past several incidents, be it the demonetization, be it the GST implementation, be it the COVID era where the collection efficiency had tripped much below, and they have managed to come back strongly on back of their underwriting skills. So we expect a strong upside from the stock. We have upgraded the stock with a target price of 825, and see that the small finance bank, AU Small Finance Bank, doing well in the years to come.
All right, Siddharth, thanks a lot for that. Well, for now, the Asian markets are under a lot of pressure. So just pull up the Nikkei market for you. There's a steep cut that we're seeing over there. It's down nearly 2%, leading the losses across Asia. The core inflation data that came in, it came in at about, in Tokyo that is, came in at 2.8% for August, slightly below the 2.9% that was expected by economists. So that's the data that came in there. But in general, I mean, there's risk aversion across Asian markets, and that doesn't bode too well for markets like ours. Mitesh Thakkar and Shrikant Chauhan join in. Shrikant Chauhan, of course, is the Vice President at Kotak Securities. Gentlemen, morning to both of you. Mitesh, let me begin with you. Do you think that this market is headed lower today? If it is, then what is the expectation for the rest of the day?
Good morning. I think the market is basically consolidating. So if you talk on a day-to-day basis, yes, we will have ups and downs. But last many few days, if you look at the markets, we haven't broken below 19,250, 19,200 on the Nifty. And we have not shown any signs of getting past 19,580 or maybe or on a higher side, 19,675. So I think it's market which is sideways but choppy. Today it could be lower. Clearly the SGX is negative. The global indices are showing some negative signs. But I think as long as we don't break 19,250, 200 zones, I think declines closer to that level would be buying opportunities. And on the upside, I've been maintaining that take profits, as you get closer to about 19,600 levels. Between the two indices, Bank Nifty could be just mildly strong index in the short term. I would want to see if the levels of 44,100, 44,000 holds, then maybe attempt to trade over there, because I think in the short term, Bank Nifty might cover up for its underperformance. So that's the only bias which I have for the day.
Okay, all right, got that, Mitesh. Let's welcome Shrikant as well. Morning, guys. Shrikant, what about you? How do you approach trade today? Yes, it was clearly a disappointing session, but going by the GIFT Nifty, the opening is likely to be 100 points down. Would you look to buy or avoid it?
Good morning, Nigel. Yeah, I think, see, the way yesterday the market was down and today it is opening down with a gap of almost 90 to 100 points. I think based on the overall technical formation of last few days, we are of the view that again the markets are approaching to the levels of 19,250 or 300, where it has found good amount of support in the past. So close to 19,300, we should look for adding some long position. Also, if we go through with the India VIX, then the vaults are very low. It is between the range of 12 and 10. So whenever there is a low vaults, we should look for adding or taking some contra bets in the market. So I think close to 19,300, we should look for adding some long positions with a stop loss at 19,245. For the Bank Nifty, 44,000 is going to act as very good support. So close to 44,200, there also we should look for adding some contra bets.
Okay, let's talk about individual stocks then. Mitesh, let's begin with you. What's on your list today?
I have a mix of buy and sell calls. A buy on Emphasis with a stop at 24.20. I would look for targets of around 25.50 on the upside. A sell on Jindal Steel and Power. Keep a stop at about levels of 656. Look for targets of around 630 here. And a sell on Syngene, which I think after a good rally can give some kind of a pullback and a correction. So sell here with a stop at 807 for targets of 775. and one more conditional buy. That's on Indian Hotels. The stock rebounded well a couple of days back. If it clears the intraday pivot of 408, 409, buy with a stop at 402 for targets of 423.
All right, got that, Mitesh. Srikanth, what about you?
Yeah, Nigel, I think the market is more and more stock specific, and if the markets are opening down with a gap of almost 100 points, then we should look for adding those stocks which are really doing well since last few days. And if they are correcting back to their important supports, then it will be an opportunity for short-term traders. In that space, we like BHEL, which is currently around 107, 108. In case if there is a lower opening, then we should be buyer with a stop loss around 104.5. We are expecting stock to move towards 115 in the next few trading sessions. We also like PVR, which is currently around 1720, 1750, and consistently the stock is forming continuation formation. So based on the formation, we should be buyer at current levels with a stop loss close to 1680 for the target of 1800 on the high side.
Okay, thanks a lot for that. Let's take a quick break. On the other side, we'll have the pre-opening rates. We will also have Harshit Kapadia of Elara Capital to talk about the big opportunity in the space industry after the successful moon landing of Chandrayaan 3. We will also put focus on the defense sector. Do stay tuned in.
Okay, welcome back. Manoj Muralidharan is now joining us with a quick check on the F&O side of things. He's, of course, with Relegate Broking. Manoj, good to have you with us here. Looks like you're in Friday mood. So colourful, adding colour overall. How are things looking? What's the lay of the land, Manoj? I mean, things are looking... actually suddenly turned south very violently yesterday. And this morning, of course, the indication is that we'll get a sharply lower start. Is that low of 19,253 going to hold, you think, or are we headed lower?
Good morning, Prashant. Prashant, of course, it's Friday and we have to be in that mood. Now, Prashant, only the traders are a bit worried about the event that we have overnight. But the difference here is we are entering into the last 4 days of the monthly expiry. So if you say the last month, when we had towards expiry, the Nifty positions, if you remember, it was almost higher by 27 lakh, which I keep on saying. So a clear increase in the participation, which is denoted by the open interest in any index future, that is a clear way of saying the momentum and the trend. Now, even for the last 4 to 5 sessions, if you see the Nifty open interest or the positioning, which used to be around 1 crore, 14 odd lakhs, it has dipped to almost 1 crore. So that short-term traders, which were always there in the Nifty for a bounce or a trading bounce, that is still there. They have exited the trade, but we believe that September would be a series where we might see some positive buzz. Now, needless to say, 19,200, the question that you asked, we believe that might hold. And again, today it might be the lack of buying rather than selling, which might become a lackluster day. So wait for levels of 19,200 to 230, 230 on the Nifty futures. That's a good level to go long. And a good 100 odd points somewhere close to 19,300 to 340. This is strictly an intraday trade that we're talking about. The stop loss can be around 180 on that. But again, as I was saying, there is good amount of sector management that we are seeing, and the most important part is the Nifty and Bank Nifty has a very strong correlation, and it is almost at an average of a ratio analysis, somewhere close to a 2.31. Now, we believe that there is a possibility that in the September series, if the so-called 44,000 level holds on, Bank Nifty has a potential of almost 1,800 odd points. Though we saw the selling which came in yesterday, but because it is monthly expiry, we believe this can be a positive traction. So wait for a day. There is a possibility the Nifty might again inch on the positive side. Sector specific, we believe that FMCG would be good in terms of buying, and stocks like Colgate-Palmolive would be a good buy. And even stocks like L&T, which had seen huge selling yesterday, I believe 27.20 was a very stiff resistance, and the stock is at a short position. So you can short L&T with a stop loss of 27.20, and the target can be around 26.40 to 26.50 on that.
All right, thanks a lot, Manoj, for that. Well, the market's opening is just about kicking in, the pre-opening rates, that is. So the Nifty is indicating a fall of almost about 128 points. keep an eye out on that. And Reliance has been the one under a lot of pressure. This week, Reliance is the biggest loser, down almost about 5%, and the indications are another 2.5% today. So keep an eye out on that. AGM on Monday. And on the upside, a couple of these stocks like Adani Enterprises, not too bad. But the minutes of the last meeting of the RBI's Monetary Policy Committee showed that the panel's members are prepared to look through the first round of food inflation. The external members feel that food inflation is largely transitory. However, one interesting indication is that the RBI is determined to squeeze out liquidity. Lata is joining us here in the studio to give us details of all that she's picking up. Lata, morning.
I would think that the MPC minutes will be negative for banks. There is an extreme hawkishness in terms of wanting to squeeze out the liquidity from the system. You see, everyone looks at the inflation number because inflation number was ugly. But on that, you don't notice so much hawkishness. Everyone, most of even the RBI members say, we will look through the first round of inflation. As tomato prices go up or veg prices go up, food inflation goes up. But we will watch out if there is a second round. That is because of high food prices, which are persistent, which are not going away. Cereals and pulses are not going down that easily. Do people start raising wages, and do wages push up prices again? So we will look for that second round spiral is what RBI says. The external members are far more benign in terms of believing that this is transitory. RBI's worries are there's El Nino and global cereal prices may make it persistent. But the real, hawkish notes are where the RBI members talk about liquidity, and liquidity is not an MPC terrain. It is an RBI terrain, and the RBI members are referring to it. The governor's statement, we will manage the liquidity overhang proactively using the various instruments. This is actually an okay statement compared to what Deputy Governor Patra says, extremely hawkish. Risk to inflation outlook stems from the liquidity overhang in the banking system. Withdrawal of excess liquidity should engage attention of RBI going forward. And this last sentence is, I guess, most hawkish. Liquidity is a threat to the RBI MPC resolve to align India's inflation to 4%, besides the potential risks to financial stability. So this indicates that incremental CRR hike that they announced will either continue, or if it looks too foolish to continue that, because this is about the 2,000 rupee note, you can't keep on extending that for another quarter. They may devise another way in which to squeeze out liquidity. What it means is banks have to go helter-skelter to borrow immediate money to fill their CRR needs. And you may have already noticed that there are several banks offering 7% on savings rate. One of them is offering 8.5% on short-term fixed deposit. Obviously, that will mean their margins will be crunched. This could also impact other interest rate sensitive stocks like NBFCs who depend on short-term money from the market. So this is definitely bank negative.
All right, Lata, noted that view. Thanks a lot for that. And yesterday, in fact, the bank nifty as well came up substantially from the day's high. But let's turn our attention. Let's put the focus on the space as well as the defense stocks. Harshit Kapadia of Elara Capital joins us to discuss the big opportunities in the defense space as well as the top calls in the defense space. Well, hi, Harshit. Good morning. Thanks so much for joining in. Well, Harshit, stocks are moving to a new orbit. This as India has landed on the moon. How do you approach these stocks? Some of them have run up in anticipation of this, and some of them, even the last few days, are fairly, they've seen a sharp spike. According to you, which one is best placed and why?
Morning. So yes, the stocks have run up, but also if you see the pipeline is also now raising its hands, and we are seeing increasing amount of order inflows which would be coming first from the domestic market, and slowly there is also a rise on the export side of the market as well. So that's a positive for India, where India was hardly any exports of defense as well as space goods. Now that sector is slowly getting its true sense in the market. And in terms of stock, I would still be very positive on three names, which is Hindustan Aeronautics, Bharat Dynamics, and Bharat Electronics within the PSU space. On the private side, we like Data Patterns, Astra Microwave. PTC Industries is something that we are very positive about.
Okay, let's talk about these stocks one by one, right? You said you're positive on Hindustan Aeronautics, but if you look at it in the last 1 year, Harshit, the stock is up almost about 80%. At this price of almost 4,000 rupees, is the risk reward still favorable in a stock like Hindustan Aeronautics? Or do you think that most of the price appreciation is done already?
Certainly the stock price has, seen a considerable rise. But also what we have not factored in is largely the export pie, which is right now possibly very low for Hindustan Aeronautics. So that could trickle a huge order inflow for the Hindustan Aeronautics. Given the present situation on the global export side, this is a rising opportunity for India for both helicopters as well as fighter jets. So they are already talking to multiple countries. We already saw one announcement that they have signed an MOU with Argentina for helicopters, light utility helicopters. So that could be a starting point, and we should see more such countries, buying products from India, and Hindustan Aeronautics would be the beneficiary here.
Okay, and the other stock that you spoke about in the non-PSU space is Data Patterns, right? I mean, that one as well has been in the news. If you look at the last 1 year, it's had, I think 1 year back it was at 890 and today it's almost at 2400. Over there as well, how are the valuations looking now, and what is the kind of growth you see both in the price as well as in the earnings?
So as far as earnings of Data Patterns are concerned, so that's a company who was earlier a component or the component manufacturers is right now want to become a system integrators in the radar and the electronic space. So that is the long-term vision of the company, and they are also looking to get into satellite manufacturing for defense as well. So all this will also lead to them inching the revenue at a faster rate than what it was earlier doing. So the run rate, which was 200 or 500 crores per annum, is going to improve to probably 1,000 crores plus. So that could be a trigger point for stock. In terms of earnings growth, could be in the range of 40 to 50% for a longer time frame. Given the order inflow momentum.
Okay, all right. What about Medani? Do you track that one, Harshad?
Yes, we do track Mr. Dhaatu Nigam Limited.
So tell us more about that. I mean, that actually was an underperformer, but in the last few months, suddenly that as well has joined the party. Your view there?
Yes. So yeah, they are largely the raw material suppliers to defense and space industry. Presently, you see as more order inflows coming in for these, goods. Most of them will go to Mr. Dhatu for getting the raw material, whether it is the alloys, titanium being the speciality. So, and they get rare earth material minerals, which is cobalt as well. So they are in a very strong space, where they can source the material, they can manufacture those with alloys and can supply to both defense and even the space as well. So even in Chandrayaan 3, they were supplying a decent amount of materials for the spacecraft as its satellite as well as for the rocket.
Okay, since you were talking about Chandrayaan 3, we had that conversation with MTAR Tech as well, and they spoke about how they were the big suppliers there and they have huge order visibility as well. Is that another stock that you like, and from a long-term perspective, what's the target price?
Yeah, so MTAR is something also we like. I don't have a formal coverage on the company, but given that they are fairly, present in the defense and aerospace space as well, we are seeing order inflow momentum for them also rising. They also have a vision from becoming a component to a system integrator in the satellite space, and they have already started moving in that particular fray. Added to that, they also into heavily on the green hydrogen space, and that should be also a major growth driver for MTAR Technologies.
All right. Thanks a lot for joining in. Appreciate your thoughts. That is on the entire defense and the aerospace vertical and what you should be looking at. The market is indicating not a bad fall, actually, down about 0.5%. The Nifty holding on to that 19,200 mark. In terms of individual stocks, Paytm, of course, is in focus. But apart from that, you also have a couple of these names like BEL that's up almost 2%. Mitesh is here to give us the big call at 9:10. Mitesh, what are you looking at?
I'll go with the sell on Jindal Steel and Power with the stop at 656 for targets of 630.
All right.
Okay, well, that's Jindal Steel and Power, down about 0.5% or so this morning. So we're at the end of the pre-open, Mitesh. I mean, looking at the rates, if you get an open like that, anything to do? When you get a 90-point lower start, anything to do immediately?
Not really, Prashant. I think the Nifty, would open around 90,300. Another 30-40 points lower, I might attempt to.
Okay, well, that'll get us closer to the lows of last week, right? 19,250 or so. So we'll yeah. So we'll see. All right. Let's talk about some let's talk about some stocks in focus. Momentumizer, and I think the company in focus is S Chand. Rima is here with details. Rima.
Thanks so much for that. So the stock on my radar is S Chand. It popped up on the price volume charts yesterday. Stock surged 14%, fresh 52-week high. Volumes were 5 to 6 times the kind of volumes that we typically see. And I went back to look at the company's numbers, and pretty decent showing in Q1. So year-on-year revenue growth went up by 3.5%, but this is the highest ever Q1 revenues. Gross margins are 68-69%. Their net working capital days declined by 19 days. The company turned debt-free. They have a cash balance of close to 55 crore rupees. And in the conference call, the company also said that they've earmarked 20 crore for a potential acquisition. Also very recently, the Honorable Union Minister for Education, Shri Dharmendra Pradhan, inaugurated the joint session of the National Curriculum Framework for School Education. So that also could be a potential trigger.
All right, Rima, thanks a lot for that. Well, let's get some brokerage views in as well in case you missed out on any of them. Bajaj Finance is in focus. Nomura initiated a buy with a target price of 8,700 rupees on Bajaj Finance. That's a big upside to the current market price. They talk about how the business momentum is very strong. They are consistently delivering strong numbers. And all this fear about Jio Financial Services at the moment is overdone. So they speak about how Bajaj Finance can deliver an AUM compounded growth of 27% over the next 3 years. There's also Birla Soft in focus. Nomura has initiated a buy with a target price of 610, which is once again well above the current market price. They talk about how there's a growth turnaround in the offing and there's significant transformation underway with the new leadership coming on board and how they're heading towards industry-leading growth. And finally, you have K Fintech, where Jefferies has initiated a buy with a target price of 500. K Fintech is a leading player in providing services to mutual funds as well as solutions to listed corporates. They have the market leadership there and they will benefit from financialization of savings. So this is just a bunch of brokerages that are positive on individual stocks. And K Fintech actually is up almost 6% in a falling market. By the way, Kaynes Technology is gotten into an MOU as well with the Karnataka government. So Kaynes Technology is up almost about 6% looking pretty good there. So these are just a couple of, Kaynes Tech, there you have it. A couple of stocks that are in focus this morning. But just about 5 seconds to go for the markets to open today. Last trading day of the week, and it's not looking great actually. Down about 100 points straight off the back on the Nifty. The sensex is down 300 points. What's leading from the front on the downside? Reliance is just struggling for the last many days. In fact, once again, the top Nifty loser this week down about 4% odd. So things are not looking good there. Hindalco, LTI, Mindtree, Tech Mahindra. So IT in general has moved to the back burner, whether it is Infosys, Wipro, Tech Mahindra, all in the red right now. Grasim is down about 1% as well. And Divi's Labs, ICICI Bank, HUL, a couple of other stocks that are in the red as we speak. The market has started with a cut of around 119 odd points, 120 now. The Sensex is down 450 points, and not a good opening at all for the bulls. Led largely by the global, weakness, the Bank Nifty is now down almost 300 points. But what's supporting the market today is a couple of names. There's NTPC, Adani Enterprises, Hero MotoCorp, Adani Port, and Britannia. So these are a couple of stocks that are just about holding on the green line. But otherwise, it is the market is definitely sulking. In fact, the advanced decline ratio is now well in favor of the declines. Over 1,000 stocks on the declining end. There are some stocks that are bucking the trend like Paytm, Amber Enterprises, etc. Nigel will talk about that. But in general, it's a sticky start.
Well, it's a sticky start, Sonia. I just want to focus on Jio Financial Services, actually. There were close to around 17 crore shares in pre-open that were pending for sale. Close to around 5 crore shares have been picked up. So that number has come down now. So just keep an eye out on that. That number has come down to around 12 crores approximately in terms of selling. So there is a fair bit of action in pre-open itself. So keep an eye out on that one. A couple of other names. Kaynes, well, it's entered into an MOU with the government of Karnataka for investment of around 3,700 crore rupees to set up semiconductor assembly and testing. So that's the reason why that one is up close to around 7%. The Defense Acquisition Council, they have approved proposals worth close to around $1 billion, which is beneficial for BEL. Also some kind of a rub-off for Astra Micro as well. And by the way, Astra Micro, the reason that one is higher is because they received orders worth 158 crores. So that explains why that stock is doing well. Paytm, well, the large trade took place in pre-open, so that one's opened up in the green. Coforge, that was the big mover yesterday. Bearings has exited. 26% is what they sold, and that one was up close to around 10% by the time we wound up yesterday. So that one is in focus. Universal Auto, I don't know whether we have that stock. Very, very small stock. Nimesh had told us yesterday an influential investor could be buying into that, and they bought. Ashish Kochole has bought close to around 16% odd, but very small company out there. The record date for some of these buyback names as well. Let's see how the stocks are reacting. Pyramid Enterprises. Today's the record date. Yesterday was the last day to buy to be eligible for it. So the stock ended at the low point of the day. So Pyramid Enterprises should be one such stock. It's down close to around 2% odd because that buyback, those who were playing for buyback, they bought till yesterday. Today, in fact, it's not valid. So FTC is the other one as well. Some of these stocks, record dates is today. KRBL Limited as well. So let's pull up a few of them. And India Mart as well. So India Mart, all of them, in fact, a little bit lower because of that buyback support. Prashant, what else?
Well, so settling down, right? I mean, pretty close to the low that we had last week, which is 19,253. We are at about 19,266. That's about 120 points lower at this stage. Market breadth is still positive. I mean, mind you, I'm talking about the overall. About 100 stocks separate gainers and declines. I'll just look at a few other names on the downside to begin with. Let's look at Shoppers Stop, which is down, I think, 7.5%. That's coming in for some selling, 750 on Shoppers Stop right now. TVS Motor, there was that bike launch in Dubai yesterday, 1.33% lower on TVS. Stocks at about 1344. There's Bajaj Hindustan, which is down 2.5%. Wipro is starting about 1% lower. There is Zomato, which is down about 1.5%. Piramal Enterprises is the other one, which is down 2%, 1,035 on Piramal. And there is Ambuja Cement, which is down 1.5%. GMR Infra down 2%. So some of these are just kind of, are pulling back after what we really saw. On the upside, Paytm is up 2%. I think we highlighted some of this earlier. Amber, blocks here. Suzlon is creeping up a little bit, again, 3% higher. Cairns we spoke about. Keep an eye out on, Astra Micro, that's coming up with about a 3% gain. And go down the list, there are more names, but in the smaller, Supreme Industries made that acquisition. Stocks up about 1.5%, but it's just kind of gone one way, Supreme Industries, for the last many days now. So overall, it's a down market as expected, but in the broader market, gainers still slightly ahead of the number of stocks down.
I just want to make one mention on a pocket. Remember, we were talking about this whole home improvement theme and the polycabs, the APL Apollo tubes of the world.
Yeah.
Today, Cera Sanitary Ware is the stock that, it's had a fabulous run. I mean, that stock, Cera Sanitary Ware, is up 72% this year and it's sitting at a fresh 52-week high. So I know the market is really volatile, but there are certain pockets which the street definitely is latching onto.
1% or higher on Cera as things stand right now. Well, Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much for your time. So we got you on a not a big day, but on a down day. So we're down 100 points, Gautam. How are you looking at the price action over the last couple of weeks, and what do you make of it? What's the assessment near to medium term?
Good morning, Prashant. Well, I think we've gone through a very unique correction in the last 1 month. There was this euphoria around that level of 20,000 on the Nifty last month. You had a scenario wherein just about everything was doing well, large caps, mid caps, small caps, all at the same time. Indian markets enjoyed a lot of tailwind. Global markets were very steady. And I think that euphoria pretty much triggered this correction, which was much needed because I think the month of June and July saw a phenomenal, almost a vertical move up. But I think, as I said, this is a very unique correction because the Nifty is fallen about 700, 750 points. But the beauty is you have the mid-cap index, which was at lifetime highs yesterday. And the small-cap index, the small-cap 100 index, hit a level of 12,000 yesterday, which was also a lifetime high. So I think this is a market about stocks. I think we have been maintaining this right from the start of this year, that the index will not do anything special. It will go through its correction phases from time to time. But I think sectorally, theme-wise, I think there are immense opportunities and this trend is going to continue. So really, it's just the top 100 which have been impacted. Aside of that, I think this market continues to be very, very strong. Also, I do believe that this is just a normal correction. 19,300 has held out so well in the last 2-3 weeks. If this number were to break, you might see an attempt into that 18,900, 19,000 zone. But anything close to 18,900, 19,000, I think the market becomes a buy, and we hopefully see a turnaround very soon, leading to a move back to 20,000 and beyond. So the short medium term view remains bullish. It's just that the index is going through that difficult corrective phase, which I believe closer to the end of this month should get completed.
Okay, that's great to hear, Gautam. I think after a while I'm hearing you get so bullish on the market, right? If I'm not wrong.
No, Sonia, it's just after we've been talking after a while, and I think in between so much has happened in the last 2.5 months. And, the mid-cap, small-cap space, there's so many themes and sectors have done so well. So, there's nothing on the charts in absolute terms that tells us that the markets are weak. After all, we've fallen 3% from the highs. If you compare India versus the world, India versus US, India versus Europe and the rest of Asia, our ratio charts have been in an uptrend all along. So no complaints, honestly.
So, the reason I'm asking you, Gautam, is because, this is the time when the market is sort of stalling a bit, right? It could perhaps be just taking some time out before the next leg of an up move. But what do you do at a time like this? And what are the, markers on the upside? I heard you mention 20,000 briefly, but by the end of the year, where do you see the Nifty?
I was very optimistic yesterday because the Nifty was making an attempt to get past that big resistance of 19,600, but it faltered. And today we are back at the lower end of the range because this 19,300, 19,600 band has pretty much been a pendulum in the last, a month or so. And once the Nifty gets past 19,600, I think the uptrend will resume. And then we are looking at 20,000 and possibly 20,400. Unfortunately, I do not have big numbers to work with beyond 2,400 because I think it's a sort of an inflection point. But any which way, I think that, as I said, this market is about themes. So we continue to like the pharma space. We love the way the IT space has come back in the recent past, despite all the negative talk and the headwinds, coming from global markets. And I do believe that the IT index is readying for a fresh breakout and could actually lead the market higher. And let's also not ignore the banking index. I think around 44,000, there is not much to lose on the bank Nifty. And I also love the way the PSU banking space is setting up at this point of time. So these 3 or 4 pockets that I highlighted, I think are the best opportunities as I see it, till the Nifty, goes through this consolidation.
All right. Well, Gautam, just request to just hang on. By the way, we have a bit of a recovery that's underway on the Nifty itself. We're 50 points off the day's low. Bajaj Finance, just pull up the intraday chart out there. Stock has done quite well. It's recovered from the day's low. LTI Mindtree as well as another stock that's doing well. And even Bajaj Finserves, there's only so much that they can do in terms of weightage. But that Nomura note that stated that, they have well-diversified liabilities. Exit of HDFC is a positive for Bajaj Finance, and also they believe the concerns surrounding, with the entry of Jio Financial Services are a little bit overdone. So both these two stocks doing quite well. Well, Gautam, always good to hear your thoughts, Gautam. I wanted to ask you about a large heavyweight stock. HDFC Bank, that's been a rank underperformer. Year to date, not done much. I think last 1 year, maybe last 3 years actually, from COVID levels itself, it's rallied the least. Now, that's the largest weight on the Nifty. How are things shaping up out there on the charts?
HDFC's bank has just become too big for the Nifty, for the bank Nifty, and for the overall market. And if this one stock does not do well along with Reliance, it becomes very difficult for the indices, the headline indices, to do well. And that's exactly what has happened in the last 1 month. But I think there was so much development around the merger. So I think it's all settling down now. There isn't much to lose. I think 1525 to 1550 is a rock solid medium-term support on HDFC Bank. And I want to believe that it should turn around from somewhere around these levels and probably go gradually back to 1750 to 2000. So we remain extremely bullish. It's just that it's going to take its time. I don't think these stocks can give you momentum. In fact, the top 50 stocks in the Nifty just don't have great momentum to do well. Whereas if you go outside of the Nifty, look at the NSE 500, look at the NSE Next 50, those pockets offer far greater value.
Gautam, so let's talk about stocks from that space and tell us a few stocks from a positional standpoint where there is money to be made.
So, Prashant, I spoke about IT. I think probably we're one of the few people on the street to have a very contrarian view on IT, because I think price correction was done with a few months back, and I think it's gone through time correction in the last 3 months. The setup is beautiful. All the negative news has been pretty much digested. The ratio chart of the IT index divided by the Nifty is at a multi-year low, and I think the chances of a turnaround from here is pretty high. And we've been betting on TCS and Tech Mahindra. I think we like both these stocks, and we feel that they could lead the market higher, along with Infosys, which has actually come back very well after the after the disappointment from the results. So IT is one space where I believe that there is a 10 to 15% move coming, which I don't see in any of the large cap indices. Aside of that, I think metals has been in our focus list. I think metals does not have much to lose. So you're looking at JSW Steel, the Tata Steels, the Nalcos, and the sales of the world. Very good chart structures, and I think they should rebound as well. And pharma clearly has been the poster boy of the last 3 months. This rally is going to continue because pharma came out of a 2-year-long bear market. So the opportunities, even from current levels, are quite immense.
Okay, one final question then. What would you do with some of these names in the banking space that are struggling a bit, right? I mean, of course, HDFC Bank is the poster boy of the struggling stock of the year. But apart from that, there are names like SBI that have come off about 10-12% from their highs. Do you use this as an opportunity to buy, or do you stay away?
We are extremely positive on the entire PSU banking basket. The PSU banking space in the mid cap and the small cap side has done very well. You might have seen many big winners. And if you see the PSU banking space, we see a multi-year breakout that seemed to have taken place in the recent past. So I see SBI rebounding from here. I see Canara Bank doing well. I see BOB doing well. And some of the other smaller names, which is usually a retail favorite, I think they should also continue to do well. So if you want to be focused on banking right now and till the end of the year, it'd rather be PSU banking.
Okay, Gautam, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. And that's an optimistic Gautam Shah on the market, saying that the short to medium term is positive. They are optimistic on the market, but the very near term, maybe a little bit of struggle is what you can see. But let's talk about the consumption patterns now, because TTK Prestige is the stock on our radar. The company reported a weak Q1 performance. The margins continue to be under pressure on the back of discounting, and in its conference call indicated that the demand environment remains challenging and they only expect a turnaround in the second half of the year. To discuss the demand outlook a little more in detail, TT Jagannathan, chairman at TTK Prestige, joins us now. Mr. Jagannathan, good morning. Always great speaking with you on the channel.
Good morning.
And hope you've been well and in good health. Sir, of course, in the conference call, you did mention that the demand trends are not looking great, but just wanted to understand in a bit greater detail, what do you mean by that? Where are you seeing the weakness emerge? And how long do you think this stretch could continue?
Actually, you have to look at this vis-a-vis last year. Last year, we had a fantastic year. First quarter, we grew 44% because we were just coming out of COVID and everybody spent money on the kitchen. This year, everybody's spending money on leisure. Every restaurant is full, every hotel is full, every flight is full. So the share of wallet for kitchen has come down. It's not something that's permanent or something that's worrying. It happened because last year first quarter was very good. The comparison is not very good. Even second quarter, but from the third quarter will look very good.
Hi, Mr. Jagannathan. Good morning, sir. In the last couple of years, the quarter two has been the largest quarter. You have done more than 800 crores in the quarter. How far off will it be? How much lower will this, quarter two be in comparison to the previous ones? Will it be anywhere close to that 800 crores or will it be much lower?
No, we're looking at 5% drop on that.
5%. So around 750 crores or that is doable for...
Yes.
Okay. And what about how are demand trends? Are you seeing some bit of a pickup? Inflationary pressures were there. Demand
festival buying has started and it's very encouraging. Very encouraging. But it reflects only in the next quarter.
So, in a proper way, things will start to look up and up only third quarter onwards, sir. Is that what you're saying?
Yes, Prashant.
Okay. And is there and you said it's just a very large base effect. I mean, in terms of actually what you're seeing, the pulse and feel of it, it's okay. I mean, things will come back. It is a normal kind of environment. There is no underlying pressure.
If you look at the line of CAGR for the last 5 years, we have grown year after year. The blip last year was because we did extremely well.
Okay. Yeah. So that base effect is there. We understand that. Mr. Jagannathan, I want to understand what's happening on the operational front, because earlier you had guided for, I think, 15 to 17% EBITDA margin for the full year. Do you maintain it?
Yes.
Okay. You're maintaining that guidance. So the reason I ask is because discounting has also gone up, and I'm sure with with the spends reducing, consumption patterns dropping, and there is of course a lot of competition, perhaps there could be some near-term pressure on margins as well, you reckon?
No, we do not discount. We only discount as to our plan. We don't disrupt the market at all.
Okay, all right. Mr. Jagannathan, it's good to know that margins will be in those mid-teens, 15 to 17%, but you're also guided for double-digit revenue growth. Is that still on the cards, going by the trends that you have seen?
For the second half, yes.
So for the year on the whole, what will it be? Flattish? First quarter was a degrowth of 8%.
Yeah, I would expect flattish.
So revenues will be in that vicinity of around 2,800 crores odd for the year.
Around that, yes.
Okay, got it. You give us some more clarity then. You're working on a premium brand. So I just want to understand more about that. Will you be launching it in-house or will you be acquiring it?
Launching it in-house.
By when?
I can't give you that number. I can't give you that date.
This is Judge, right?
No, Judge is the master.
The master.
Judge is not the premium. That's the lower end.
That's the master.
That's been launched.
So tell us about Judge then. That has grown very well. So what is the growth trajectory from here on?
Well, we're looking at fighting the cheaper brands. And like you said, it's doing well now. We'll have to wait and see how it plays out.
So, last few times we've spoken, you've been telling us that exports have been doing phenomenally well. That
Yes,
you've been having difficulty keeping up actually, and you've been diverting production towards exports. What's the situation now?
Situation is Europe has slowed down fairly dramatically in terms of their market, so they're stocked up. So there's a temporary blip again, but my customers have told me that it'll all get set right by December.
Okay.
Okay. So that would mean, earlier I think exports was 5% of your overall business. You were targeting to take it to 10%. Is that on track?
We'll get not 10, but we'll get it somewhere between 5 and 10.
By when?
By the end of the year.
By the end of the year. Okay, somewhere between 5 and 10%. So you're saying that Europe is under pressure. Of course, for all industries, export markets have been quite tough this time. Any other markets where you are present, where you're still seeing some pockets of pressure?
90% of our exports are Europe and America. We do exports up to the Middle East, but bulk of the exports are to Europe and America.
And how is America doing, sir?
Also slow.
Slower compared to the previous two
Yeah, but
quarters.
they
And
all
that's again
believe,
because
my customers believe it will pick up.
by December, you said, right?
Yeah.
Okay. All right. Mr. Jagannathan, what is the average price of a cooker?
I have no clue.
No, because you have a new capacity at Uttarakhand, right? That's coming up, I think, with 1,100 cookers per day. So I was trying to calculate the revenue potential from that. So, if you could give us that number.
Those are, in fact, stainless steel cookers, so they're a little more expensive.
Okay.
I'm still lost, sir. So if you could give me a rough range in terms of pricing, because we want to get to the revenue potential out there.
I'm guessing about 2,000 rupees.
2,000 rupees. All right. So just if I put in the math, this will be an incremental 70 to 80 crores approximately at optimum levels.
Yes.
Got it.
Okay, just one, niggling worry. Of course, I thought Nigel was asking about the price of cookers because he's out there to go and buy something for his own kitchen.
When I put that question, I was wondering, it's not sounding too right. But anyway, we got the number that we're looking at from a financial perspective. 2,000 rupees stainless steel cooker, and you get to around 80 crores also.
Okay. Sir, I have to ask you about the overarching theme, which is a slowdown in consumption. I'll come to that in a bit. But before that, just one niggling worry on this promoter pledge of 3.6% that was created. Why is that? And any change in the promoter holding at all?
No. In fact, we've paid up that pledge. We've now taken it back. Okay. It was a temporary requirement, which we took, and now it's gone.
So the promoter holding will continue to stay at 70%, is it?
Absolutely, 70.48%.
70, okay, got that. Just one final question from my end. You know, you started by saying that consumption patterns are slowing, and that's also because of people are now moving out of the kitchen and sort of traveling, consuming outside. Do you think it could be a longer stretch of a slowdown? I mean, you know, are you penciling that in as well in your forecast?
I would not like to use the word slowdown. We're comparing it to last year. Last year we grew 40%. If you want to compare it to that, I don't think it is fair. I don't think you can call it. There is a share of wallet that has moved from the kitchen to leisure. People are not going to be traveling all the time. It will come back.
Well, they'll want home food, right? But beautifully put, sir. Thank you very much for your time. Great to have you with us here, and thanks for joining us with that perspective. It's always good speaking with you. Okay, the market's down, 70 points. So, yeah, there is that recovery which we were talking about earlier. Just a quick look at things. Sun TV is the big mover. Stocks up about 4% or so. And, we're at about, 605, 606 odd rupees on Sun TV. Take a look at Canes, which has moved up even more. It is up 10%. There is, Astra Microwave, which is up 4%. KPI Green. Atul Auto is making a move. I mean, it's been a fantastic week for Atul Auto. It's up 25%. Friday 2 now, and we're not done with the day. So perhaps can do more. And there is a Green Panel and Sirma and so many other names which are coming into the mix as we progress into today's session. We'll take a quick break here. We are back with the management of Brigade Enterprises to discuss, what's happening in their business. Stay tuned. Coming up.
Welcome back. Well, a couple of stocks are moving actually pretty well, though the headline index is down. And by the way, we've recovered a good 50 points from the low point of the day. The mid-cap index is now heading towards the green. It's down only around 0.1%. And various stocks are doing well. Genus Power making a fresh all-time high today. That's moved to the high point of the day. Indus Stars as well has moved a little bit higher. And I think Dixon Technologies as well, from trading in the red, that's turned around a little bit. Well, let's get to our next management. Let's focus on Brigade Enterprises. Now, the company has entered into a sale deal for acquiring around 6.5 acres of land in Chennai to develop a residential project. To understand more about this and then focus on other aspects, we're joined by Atul Goel, the CFO of Brigade Enterprises. Hi, Mr. Goel. Good morning. Thanks so much for joining in. Well, give us a few details. What is the cost of acquisition out here? And give us some kind of details on the, the timeline of this launch, what kind of a project will it be, and sales potential.
Good morning. As you said in your introduction, that it is a 6.5 acres land. So it is a corporate land which we have bought, and it is on the main OMR road. We already have a very, very big development there with GIC, which is a World Trade Center in Chennai, and we also have a residential attached to it. So it's a very prime property. We have acquired it for 145 crores. And we expect around 1 million or so development there, which will be mainly on the residential side.
At what price, Mr. Goel?
Yeah.
At what price? So, I mean, 1 million square feet of saleable area. At what price?
Yeah. So it's very difficult right now, but you can say around 10,000 is the minimum. But by the time we launch, it should be much more. So around GDV will be in the range of 1,000 crores or so.
Okay.
Okay. Any more land buys that you're looking at the moment, and what is the areas, what is the geographies that you're looking to buy land at? What is the amount, the corpus that you have outlined for this?
So see, we are looking for land, and as the sales are very good in residential, we are looking, we recently bought an auction in Hyderabad for 9.5 acres or so, which was for overall 660 crores. So we are trying to take land more in Bangalore, Chennai, and Hyderabad to spread our basket so that everywhere we can do the launches. Right now, the maximum launches and sales are from Bangalore. So everywhere we are buying, we are looking for land and trying to take good land. Overall, if you say we should do around 500 crores per year of land acquisition based on how the market demand is there and how the sales go ahead in coming quarters.
Okay, so you already have a 340-acre land parcel in Bengaluru currently, right? How much you're planning to grow it by? And what's in the pipeline for, say, the next 6 to 12 months in terms of new launches?
So in new launches, we are planning around 7.5 million or so. Yes, there has been some delay in approvals, but definitely we are targeting around 7 million or so launches. There can be some delays because there are some launches from Chennai as well. So based on the approvals and the RERA approvals, we will try to launch that much. Of course, Bengaluru will always remain a mainstay for the company. We are going ahead and doing more and more acquisitions in the form of JDA or in the form of acquisitions. But see, our prime focus today is Chennai and Hyderabad, because we want to increase our focus in both these cities. Chennai already we have bought land of around 12.5 million or so. Hyderabad we have started. So focus is on all the three cities, and Bengaluru will always be a focus because it is a prime focus for the company.
All right. Just one thing, Mr. Goyal, in all these cities, three cities, could you clearly tell us how much is the saleable area that you're sitting on at this point? Chennai,
So
Hyderabad and Bangalore? Yeah.
Yeah, so right now in Bangalore, it is around 33.3 million. In Chennai, it's 12.5 million or so, and the rest is others. Of course, now Hyderabad will also get added to it, which will be in the range of 3.5 million of development in Hyderabad.
All right, Mr. Goyal, there have been a lot of NRI investments in the real estate market. Are you observing that sort of a trend as well in your projects?
Yeah, some NRI investments are definitely there, but I would not say that it has been a increased demand. Yes, demand is there. Bengaluru as a market, people like to settle here because of the talent which is there. So demand has increased, but I will not say to a very, very great extent.
But I recently visited the city and I realized that there is not only rapid urbanization in Bengaluru happening right now, but there's also a big destruction of the green cover, which is, of course, another issue altogether. But I take your point that, things are definitely picking up. But that's on the residential side, right? Tell us a little bit about the commercial side of things. This time, again, commercial demand was a bit on the weaker side. What is the occupancy like and what is the way forward for you?
See, for us, the main commercial demand and the commercial properties which we have are in SEZ, and of course SEZ has been struggling all over India. Non-SEZ we don't have any vacancy. Everything has been leased out. So in SEZ, yes, there is an issue. We have around 1.2 million, and of course this talk of recession in US which has never come. So it is. I don't know how the companies have been delaying their decisions to rent in these SEZs. But of course, we are looking a lot of demand from the existing clients, because maximum of our clients are global capability centers, CG, and they are looking for good expansion. And I think we should be able to fill this 1.2 million in next 4 quarters.
So can you give us the numbers? I think in FY23, your lease rentals were about 750 odd crores. Where will it be like in the end of FY24? And you have about 8.5 million square feet of operating commercial portfolio. Do you plan to grow this further? Just those two numbers, if you can help us with.
Yeah. So rentals should go in the range of 850 to 900 crores this year. That is what we estimate. And of course, for additions, we have one project which is called as Twin Towers, where we have 1.3 million square feet, which will get completed next year. And definitely it's a non-SEZ, maybe year end or quarter one of the next year. So that is the main lease area which will be launching in the market. There is some 1.3 million development in Whitefield also. So that is also coming up, but that will take time take time of at least 2.5 years to come up.
Okay, thanks very much, sir. Appreciate you joining in here on CNBC TV18. The market's looking up and you're looking for land, building it out, and I mean, tapping into that demand, which is across cities looking very, very robust. Well, thank you for joining us. Well, we're around 80 points.
Yeah.
Sorry.
Just one point, Prashant, on Jio Financial Services. At the start of today, there were more than 15 crore shares that were pending for sale at the lower circuit. That number is half right now. It's down to less than 7 crores odd. So at lower circuit, there's a lot of buying on Jio Financial Services. Just thought we'll point that out. On a day-to-day basis, we're seeing very large selling out there. And that's a bit of a problem point for the Nifty as well, because it's dragging the index by around 10 points. So just keep an eye out on that. Gradually, maybe a couple of sessions or so, we could see that release.
That should get exhausted, absolutely. Stocks were 200, almost 200 rupees now, after making it to the market at about exactly that 262 or so. So that's Jio Financial Services. Let's shift our focus to the financials space, right? And this is a very specific focus on the personal loan segment that we're going to sort of talk about here. During CNBC TV18's Banking Transformation Summit earlier this week, Jairam Sridharan, Managing Director of Piramal Capital and Housing Finance, said that we are just months away from the next credit cycle. He was, to be sure, referring to the unsecured portion, not the entire sort of banking system or loans made everywhere, but to the unsecured segment, personal loans. Ramesh Iyer, Vice Chairman and Managing Director at Mahindra Finance, kind of countered that and almost said, well, that perhaps is not what he's seeing in his business. And Mahindra Finance, of course, is largely rural, but, I mean, it's not unsecured. Their business is largely secured. I want to play both those sound bites out for you, and then we'll invite guests to talk about this.
I think we've all got to imagine that whether we can see it coming or not, a credit cycle is coming, right? And now, which part of the segment it might come from?
How many years out, you think? I mean, best guess.
You use the wrong word there. I would say months. You look at the data. What do we see right now at the industry level? We see secured lending products, risk continuing to come down across the full industry level. You see personal loans products, risk was coming down for a long time and now it has stabilized. And you see credit cards, it was coming down, it stabilized and now it has started going up. So credit cards has gone up. Within personal loans, which look stable, if you split it up into small ticket and large ticket personal loans risk has already gone up compared to 6 months ago. So credit cards and small ticket personal loans risk is already up. MFI just went through a cycle 2 years ago, so they're not going to see any problems for a little while. But the semi-urban, urban markets, unsecured lending is risk going to remain where it is today, 6 months from now? I would bet serious money against it.
We've always believed that in this cycle, you have to be very sure and clear about circumstantial and intentional defaulters, right? If you've chased, you've kind of chased growth and you've lent to people and you believe that, their ability to repay itself is doubtful. Of course, they will all have this problem whenever such cycles hit. And if you look at the book, most of the people book, what is NPA today are actually circumstantial NPA, because if it is an intentional default, we've already taken action against it. Either we have taken back the asset and settled it, or we have provided for it and be done with it. And also look at this cycles, how the whole mechanism works. 90% of the people in this country borrow and they are responsible to repay. You don't even need to follow. It's the 5% who require some nudging, some follow-up, some reminder they pay. The whole struggle is for the last 5%.
Okay, let's welcome in the guests then. Saswat Guha is Senior Director at Banks at Fitch Ratings, and A.M. Karthik, Vice President and Group Head Financial Sector Ratings at ICRA is now joining in. Gentlemen, great to have both of you here. Appreciate it. Saswat, let me start with you. You heard Jairam very clearly outline that it's not years away, it's months away, not especially, but the unsecured credit segment. Do you, first of all, agree with that? You've put out some numbers recently. You've been talking about this. So tell us, what is your assessment?
Yeah, morning, Prashant, and thanks for having me. We have been talking about it because as a rating agency, we try and look for potential risks in the system. And as we all know, while the banking system, since I primarily look at banks, has been sort of de-risking for a fair number of years, particularly when it comes to non-retail. But I think on the retail side is where the risks have been built up. Of course, a large part of that has been driven by secured retail. But as we know, in the last couple of years, 2 to 3 years, I would say, is when unsecured retail has started building up. And I think that pace has picked up momentum quite significantly in the last year or so, especially with interest rates and going up and to a certain extent, margins questionably coming under pressure because of its impact on funding costs. And now, if you look at the scenario on balance, at a system level, personal loans is roughly about 8 to 9% of the system. For the banks we look at, which are primarily the large banks, I think most are within, say about 1.5 to 2% of their loan book. Of course, there are those where the numbers are significantly higher than that, in the range of 8 to 9%. Private banks, I think one private bank is there. There's one, the largest, state-owned bank also has numbers similar to that. But the question here is that one, of course, is that the credit demand for personal loans in itself has increased. So there is always that risk of over leveraging, one, and two, the pace at which the portfolio has grown, even though from a lower base, sort of would signify a large degree of unseasoned risk. And the second challenge with unsecured loans is on the visibility around end user funds. So, in India, personal loans has always been in demand for, families looking to fund, say, life events or basically economic events. But the limited visibility around the end use sort of makes it very difficult to distill whether the funds that have been given in recent years have been used, one, for economic activity or conspicuous consumption or even speculative market activity. And I think that is the challenge there.
So, Saswat, you're saying, I completely sort of take your point and well explained. So, 8 to 9% of system loans are, you'd say, personal loans. For banks, that would be between 2 and 3% generally. There would be variations, but overall it would be between 2 and 3%, right?
Yeah, for the large state-owned banks, that's roughly where it is at the moment, say barring State Bank of India, which is probably higher. But yeah, the portfolio itself has grown. I mean, on an average, it has doubled. But then there are banks where the portfolio has grown by nearly 4 to 5 times in the last 2 to 3 years.
And to that, got that statement which Jairam of Piramal made, we are months away. So I want a yes or no from you. Do you agree with that?
Well, see, it's very difficult to conjecture on the timelines, but like any portfolio, I would agree that we are probably going to see a cycle in this space sooner than later.
Okay. AM Karthik is also sitting by very patiently, Vice President and Co-Group Head Financial Sector Ratings at ICRA. Karthik, thanks for joining in. I want to talk a little bit about the point that even Saswat was making about the growth in personal loans, right? If you just look at the data, in June of this year, personal loans grew almost 21%, supported by good growth in housing and vehicle loans. What is the data suggesting to you in terms of what the future could look like? Is this something that is sustainable, and what are the trends?
Yeah, good morning. Thanks for having me. I agree to the points that Shashwat made broadly, but there are other mitigants which do support this growth. One, you do have a very strong digital stack which supports data, which is fueling essentially the credit decisions. Otherwise, there is a good amount of seasoned borrowers that we have on board, both for NBFCs and banks, where there is a good amount of leeway to extend personal credit. These are unsecured in nature. And most of these loans are typically priced in a way that they factor in the extent of the possible losses. What we see in typically the non-bank space is that, while the headline numbers that we see from the entities getting reported would be much lower than what we typically see for other asset segments. But the write-offs that these loans witnessed is substantially higher. So we expect, or historically the data is that the losses that we see in this segment is about 2 to 4x of what we see in the overall segment otherwise. And on a steady state basis, we expect these losses to be 4 to 6% on a cohort basis. When I say cohort, it's essentially a loan of 100 is disbursed. There is a possible loss of about 4 to 6% of that loan. Entities are aware of these risks, and the growth that we are seeing of 20% plus is supported by the facts that I mentioned: digitalization, cross-sell, upsell, so on.
Karthik,
but the pricing of these loans is where the play is, and we expect the credit cost to be higher. We expect the growth also to remain high, because that's where there is a diversification, and that's where there is a possibility for growth to come in.
So the high cost that that these come along, right? I mean, very high interest rates. That should act as a buffer for any loss, and that's, you're saying that entities are well aware, so it's kind of balanced. So you don't agree we're running into any kind of problem in the next few months, as Jairam they're sort of pointed out?
So I mean, the timelines are again always debatable. In any sharp credit up cycle, one would expect something to happen towards the end of it, but it's very difficult to estimate whether when the down cycle starts or even starts showing. Of course, we look at some early warning signals, right? So there are some early warning signals which are cropping up at this point in time, where we will try and see if the loan cycle, wherein what I mean by loan cycle is essentially that the disbursements are growing at a much higher pace, and the loan rundown is happening slowly, and the disbursement is much higher than the AUM growth, is something that one watch out for.
Got it. Karthik, do you have the figure for what is the exposure at a system level across the board for NBFCs, unsecured segment?
So overall, NBFCs, the unsecured segment, which will include the MFIs, is estimated to be about 5 lakh crores. This is on the base of about 40 lakh crore of the NBFC overall loan book. Within this 5 lakh crore, 1.5 lakh crore is towards the microfinance loans. And the remaining 3.5 lakh crore, we would split it as 2.5 lakh crore towards personal and consumption loan, and about 1 lakh crore towards the unsecured SME loans. This is a position.
So we should take about 3.5, right? 3.5 lakh crores. So
Yes.
around 5%.
3.5 on 40. So 40 lakh crores. So that's about 9%.
Okay. On 40 lakh crores. Okay, got it. Got that. So, you began, Karthik, by saying that because there is, more digital footprints, data and all, it helps in reaching the customer faster, but does it allow in helping making credit decisions better? That is the question which we will only find out, right, sometime down the line. But certainly there are more digital data points out there on the basis on which these lenders, NBFCs, rely on, not just the CIBIL score. Saswat, any additional points you want to make, off of what Karthik said or otherwise?
No, I think I do appreciate and do sort of agree with the broad points I think Karthik had made. But I like to sort of pick up on the last point of yours, Prashant, which is, to what extent, this sort of digital engine will actually, go in terms of mitigating risk. And the answer is we don't know. I think what we do know is that generally, if you look at credit institutions or banks for that matter, they've had a bit of a checkered past. And a lot of these enhancements, so to speak, have been made in the last maybe 3 to 4 years, which is sort of now helping these banks build that book. So we'll have to wait and see whether some of these sort of digital data stack, whatever you might call it, is essentially going to actually help mitigate risk through the cycle. The only other thing I also wanted to raise here is that there is also an indirect exposure that banks have through the NBFC route. So while if you look at
NBFCs
the average,
borrow from bank, borrow
so
from banks basically.
Bank exposure to NBFCs, because that percentage has gone up a fair bit since 2018, and more so through the pandemic. But even though, say, banks individually, their ticket size may be significantly higher than the odd 50,000 crore that has been, that keeps getting flagged as very high risk. But the thing is that we don't know, to what extent banks are having exposure to those NBFCs who are actually giving out those small ticket loans where those risks are significantly higher. So I mean, if there is a cycle, do we feel that it will necessarily destabilize the bank balance sheet? The answer is probably no. But I think it will certainly affect the sentiment that we're seeing at the moment. So, and I think that's also one of the reasons perhaps why, we have seen the regulator also making a lot of commentary on this well in advance, of the cycle, because, there are clearly risks that perhaps even they are seeing, that probably they want to avoid manifesting.
Okay, got it. Absolutely. The RBI has come in and said some stuff. I think Bajaj Finance made some comments in that regard. Chola has made some comments. So we'll see how things go. But thanks very much for joining us here on this program, Saswat and Karthik. Appreciate it, you guys joining in. Well, the B20 Summit India 2023 is underway in New Delhi. Let's cut across to N. Chandrasekharan addressing the summit.
Navigating through three important fundamental transitions. The first is the digital and artificial intelligence transition. The second, energy transition. And the third, a global value chain, supply chain transition. India is extremely well positioned to lead in all the three. A sentence on each. On the digital and AI transition, India over the last decade has created a fantastic digital infrastructure and has proven public services delivery at large scale. All of us who live here make our payments only digitally. I don't think any of us carry cash. Not a day goes without looking for multiple OTPs. And that's the kind of success we have had, and with a strong talent base, it is very natural for us to make and lead this transition. On the energy transition, most of the energy we need over the next 3 decades, that's almost 2/3 or 3/4 of the energy we need, we will have to create. So India will be creating the new energy for growth and will not be substituting the old energy. So that makes it easy to transition, and more importantly, that makes it most exciting and economically much more interesting for all investors. And the third, the current geopolitical shifts and a large domestic market in India and the global presence of companies in India and the strong talent base that we have makes it very compelling for India to lead the creation of an alternative supply chain. So India has many things that goes in its favor. Also, the transformative government initiatives such as the public digital infrastructure, the PM Gati Shakti, the PLI incentive schemes, the Startup India, reduction in corporate taxes, and many of these initiatives are helping India sustain the fantastic economic momentum.
Okay, well, that's N. Chandra, chairman of Tata Sons. Let's look at Jio Financial Services, where, as Nigel was pointing out earlier, a lot of the selling at lower levels when it was limit down was getting absorbed. The outstanding sell orders were reducing sharply. And there you go. From being down 5%, it's actually jumped about 5% higher. So it's a full 10% swing. And the selling got absorbed. And we've got a big move which is coming up on the upside very, very fast there. So, I mean, in terms of just the positioning, etc., there's not very much positioning, at least on the long side at all. So it's, in that sense, it's light, that technical adjustment as well. But the selling got absorbed and some buyers are showing interest. Of course, the Reliance AGM is on Monday, right? I mean, 2 p.m. onwards on Monday is the Reliance Industries AGM. So that is a big event around which I think there will be a fair bit of people will look to it to get any indication in terms of what the promoters think of the business and the financial services side, etc. So that's Jio Financial Services out there. off the circuit and up right now. Mitesh is with us. Mitesh, hi. Welcome back. Quick word on the sort of index here, 60 points lower off the lows, and your fresh trades.
Morning, Prashant. See, earlier in the day, I spoke about that, closer to 19,250, 19,200, try to attempt longs. We got a low of around 19,260. I think that level is still holding on, which means that we are still in the range. But around the lower end of the range, you would want to attempt long trades. On the stock side, also have two buy calls. Master is something, which is broken and made a fresh high. So buy there with the stop below 2,200 for targets of 2,400 on the upside. And amongst the banking names, Bandhan Bank is showing a good recovery. That's a buy with a stop at 233 for targets of 250.
Okay, well, Mitesh, thanks very much for that. We'll take a quick commercial break here. We'll come back and check on what's happening in the world of commodities. Manisha will be with us to help us do that. Stay with us. Okay, welcome back. Markets seeing some recovery and we're down about 60 odd points or so. Let's shift focus to the commodity markets. Manisha is here with, the commodity, which is top of mind. Manisha, morning.
Thank you for that, Prashant. Well, I'm looking at rubber prices, and the first half of this year is nothing to write home about. We've seen rubber prices actually trade in the negative there. But the last 1 week, we've seen prices trade up nearly 3% on the higher side, and we're trading at a 6-week highs right now on the international markets there. The Chinese demand on ground seems to be picking up, and so are the reports suggesting from European Union as well, where the automobiles and the tire sector demand seems to be picking up, and that sentiment is coming in case of prices here. There also is an interesting report from Association of Natural Rubber Producing Countries, which suggests that for the month of July, on a year-on-year basis, they have seen production gain up by 2.1%, but the consumption has increased much higher by 3.2% there. For the overall year as well, they are anticipating higher numbers there. So for 2023, this is on an year-on-year basis. The demand is expected to gain up by 14.6, while the consumption is expected to gain up by 14.7 million tons there. So strong numbers coming in from that one as well. The Indian rubber production, in the meanwhile, that report is also out. So while 8 lakh tons is what we did in the previous year, this year the production is expected higher at 8.4 lakh tons. But even with that, because India consumes more than what it produces, so 5 lakh tons of an import is also what is being factored in. India actually imports rubber from Thailand, Malaysia, Sri Lanka and Vietnam, where the rubber prices are slightly on the higher side. So some imported inflation also is what Indian markets are working with.
Okay, well, thanks very much, Manisha, for that. Interesting as always. We'll take a quick commercial break here. On the other side, our special segment is the economy. Lata will be joined by Dan Struin, who leads oil market research at Goldman Sachs, to discuss the global economic outlook and the impact of volatility in oil prices. Stay tuned.